Every year, the London Bullion Market Association releases a survey showing top analysts' precious metals forecasts for the year. The 2016 survey was released last week and showed that more and more analysts are bullish on gold. Our next guest is one of the people on that list. William Adams, head of research for FastMarkets, joins us today. Will, good to have you on the show.
Good evening.
So gold's uptrend continues here, hitting a 3.5-month high this Thursday. Even if you say we haven't seen the lows just yet, you're somewhat bullish on the metal. You're looking for a range of 980, 1222 this year. Are you revisiting it given the successful week here?
Not yet. No, I'm quite happy with the sort of 1222 high I've got in at the moment. And we have had a strong run up, as you say. And I think the market's been sort of caught off guard a bit. I think, you know, the metal investors have generally not been that bullish on gold after the sort of 4-year bear market. So I think we've just seen some strength come in on gold, but across other markets as well. And I think we're just seeing a bit of some investors who probably missed the initial, who weren't wrong at the beginning of this run of having to chase prices higher now. But I imagine, you know, we probably will start running into some supply, some resistance soon.
Well, what about silver? There's been a lot of talk about the gold to silver ratio being too high here, currently at 77 to 1. Are you more optimistic on silver prices this year? And if so, why?
I am, in that I think it has been left behind with sort of the run-up in gold we've seen this year. I think silver has suffered because of its industrial, the industrial demand side of the silver market. And with the slowdown we've seen in China, and you know, I think there are a lot of concerns about global growth anyway. I think it has been held back by that. It has run up over the last few days, and it has sort of broken higher. And I think we've got further sort of room on the upside, as you say. The ratio was hanging around the sort of the 80 level. It's come down to 77, that sort of area, a bit higher, 77, 70 area. And I think I think it will play catch up. The interesting thing with silver is it is quite often seen as a sort of a cheaper proxy for gold. And I think at the moment that is still very much the case. So I wouldn't be surprised to see silver play catch up a bit.
All right, finally, let's complete this trifecta by talking about the PGMs, platinum and palladium. Let's get your forecast on these two.
Well, again, they like silver, they are very much more industrial. Sort of their demand is very much centered on the industrial side, and they have been held back because of the weakness on the global growth side of the equation. I think they are all oversold, and I think we are looking for sort of supply deficits. And I imagine that as soon as we start to sort of see a base, then I think we will start to see some investment buying coming in. On platinum, I'm looking at a sort of a high price of around 1,200 with an average of around 1030. And on palladium, I'm looking at 665 as a high and 565 as an average price. So, as I say, I think they have been oversold. I think there is room on the upside for investor interest to come in. I think one of the factors behind or holding the metals back, at these low prices in dollars anyway, you would expect sort of producer cutbacks. But I think so much of production comes from South Africa and also from Russia. And if you look at those currencies in those two countries, they've weakened a lot recently. And that's provided some shelter really for the producers and has, I think, delayed them having to make cutbacks. But if we start to see dollar weakness now and some strength coming back into some of the emerging market currencies, then that could change.
Will, thanks so much for your forecast today. Thanks for joining us.
Thank you very much.
And thanks for watching this edition of Kitco's Gold Report. We have Gary Wagner up next.